Philippine shares bucked the regional upswing last Friday, skipping the post-Fed rate cut bump. The index notched its third weekly loss as it fell back to the 6,900 level. For more in the markets, I want to bring in Wendy Estacio-Cruz, head of research at Unicapital Securities. Hi, Wendy. Good morning. Thank you so much for taking our call.
Hi, Mimi. Good morning. Morning, everyone.
We're about 3 minutes into trade for the day, and so far, still in the red. We're at 69.69. We're off by a tenth of 1%, 8 points. The broader all shares is also down. Everybody, all sub-indices are actually in the red, except for one, the property, which is modestly higher, up by just less than a tenth of 1%. I wonder, in a month's time, we went from 7,500 to 69. Where did the momentum go? I mean, it's like we got the wind knocked out of our heads.
Yeah, I agree. Actually, when the past few months, when we hit 7,000, almost 7,600, that's because of the expectation of a further rate cut from the U.S. Fed, and of course the Philippines. But the momentum died down because it failed to. Actually, the recent rate cut failed to provide some relief on the uncertainties over the Trump presidency. Moreover, the Philippine GDP growth of about 5.2%, which is slower than expected, as well as the weaker peso, also dragged the index. So it's more of the uncertainties that's linked to the Trump presidency that actually dragged down the market recently.
So it dragged EMs like the Philippines, but it did power Wall Street higher to new records. You talked about growth, the 5.2%. Slower than expected growth that we did have. We have this note from BMI, which is a unit of Fitch Solutions. They just published their outlook for the Philippines, and they're saying that acceleration is still on the cards despite external headwinds. If I may just read, Q3 real GDP growth slowed from 6.4% in Q2 to 5.2% year-on-year in Q3. But BMI does not think that the economy is as weak as the numbers appear to suggest. In fact, output, it says, grew at its fastest pace on a seasonally adjusted quarter-on-quarter basis. Now, weakness in external demand will remain a main drag, especially as the Philippines' major trading partners are all facing domestic headwinds of their own. But that said, resilience in domestic demand will edge growth up to 6.3% next year, but it is clearly subject to downside risks stemming from a Trump presidency. So I wonder, when you hear about, the headline numbers and the expectations such as this, are you now looking to lower your PSEI target for year-end, maybe temper expectations a bit?
Right now we don't see any revisions so far, but it's possible because of course, number one is if the Philippine GDP will not hit at least 6% for the year, and of course the policy rate. Actually, if the Philippine GDP miss the expectation of around 6 to 7%, then that might suggest or solidify another rate cut from the BSP for next year. And we're still actually expecting another rate cut by the end of the year from the BSP. So that should possibly propel the index by the end of the year.
Mm-hmm. And what is your year-end index view?
Well, it's still at 7,600. So we are still expecting the index to go back to its momentum, to positive momentum before the year ends, especially by December.
All right. I just wanted to bring in some interesting corporate stories that we have from this morning. I want to start with Vitarich. Of course, we're close to the tail end of the earnings season. Vitarich reporting record net income of 259 million pesos in the first 9 months of the year. Just very quickly, this is not the first company that actually used the record in describing their income. What's your assessment of the third quarter earnings season so far?
So far, the majority of our coverage, especially the index stocks, have been hitting our expectations or even exceeding our expectations. With some, for example, like ASEN, so that's the power industry, missed our expectation, but that's because of a one-off gain or losses. So the one-offs dragged its net income compared to our estimates. But majority for the 3Q, it's hitting our expectations.
All right. Just to add a little color to the VitaRich record income of $259 million, they actually achieved this feat despite revenue slipping, falling by about 4% year on year to just 9.2 billion pesos. They're saying this as the feed's volume continuously faced market adjustments, partially offset by favorable volume growth and recovery in the chicken prices in the foods segment. So if sales were down, but profit is up, you can imagine it's mostly cost cutting that actually propelled the bottom line, right?
Yeah, it's more on the margins. So the company was able to really manage its cost, and of course, possible that its sources of raw materials are also lower in terms of prices.
So net income for VitaRich surging 6.5 times to 259.1 million, or earnings of 0.085 centavos a share. We also have this, aside from VitaRich, if I may share the other stories. Double Dragon gets the SEC nod for its 5.5-year Double Dragon retail bond offering of up to 10 billion pesos from their shelf registration. They're saying that this is going to be the last 8% per annum peso retail bond offering of TD over the long term. Quick comment on this.
Well, I think when it comes to investor appetite, it's actually enticing, given the interest rate, or the 8% interest rate per annum. But of course, since the interest rates are also coming down, so possible that most of the investors will take advantage of this one. So it's actually a good timing for Double Dragon to do this fundraising prior to the further decline in interest rates.
And of course, gaming is very hot, not just the actual operators of the physical resort casinos, but e-games. DFNN has just received its signed agreement with PCSO as a corporate business level 2 agent. Essentially, they're going to be providing expanded technology products aimed at increasing sales for lotto operations of PCSO. DFNN, does it sound attractive to you at its current price?
Well, we don't cover the stock, but I think it's more of the momentum of the sector. So it's actually good. But in terms of valuation, we don't have any comment on this one.
All right. Fair enough. Wendy, I wanted to bring in the calendar for this week. You know, last week was a super week for Philippines. You got inflation, jobs, trade, and GDP. And, you know, to cap the week, there was the Federal Reserve rate cut. This week, it's going to be pretty light for the Philippines. We're just getting FDI numbers. This Wednesday, of course, earlier, the president did sign the Create More bill, which is supposed to help boost this number. But other than the FDI numbers, no other big data points out of the Philippines. We are going to be watching other countries. Today, Thailand Forex reserves are coming out. Tomorrow, UK jobs, Germany inflation. Wednesday, of course, aside from FDIs, you're getting US inflation print, South Korea jobs numbers, Thursday, Australia jobs. Friday, Japan GDP, Fed Powell is going to be speaking as well, UK GDP, US retail sales. Is there anything else that you're watching for this week that you think could actually move the needle for the PSEI?
Well, for this week, I think there's not much, but possible that we're looking ahead to the next policy rate meeting of the BSP.
Which is happening in December already.
Yeah, in December.
The last one, where everybody's essentially pricing in another 25 basis point rate cut, right?
Yes, correct.
All right. So stocks are not doing so well right now, but do you think they're going to be rallying again come Christmas time, a Santa Claus rally at that? If stocks are not doing, I mean, stocks are pulling back as we speak. It's not all asset classes. I mean, what's the divergence that you're seeing between stocks and bonds? Are they telling different stories at this point? And when you look at alternative investment vehicles, like if you consider Bitcoin one, Bitcoin just topped $81,000, a record as well.
Well, right now, I think most of the investors are still looking at the safe haven assets. Possible that the bonds have been very hot now compared to the equities, but it's for next year, looking ahead, once the interest rates come down further, when that's when we see that the market might be able to go back to the PSEI or the equities market again.
All right. And before we go, I just want to share the peso actually opened weaker, softened 58.45 against the US dollar from last Friday's close of 58.26. I think we're now ready for your blind item. Wendy, talk to us about what you're watching closely and why you like it.
Okay. So for our house view, this stock continues to be our top pick due to rapid growth of the e-gaming sector. So as a dominant player with the 53% market share, the stock is poised for continued growth driven by increasing player participation. And just to provide some reference, in 9 months, the stock already exceeded its entire 2023 revenue record of 4 billion pesos with a net income of 8.8 billion pesos. And our recommendation is supported by our ROE estimates for next year, which is at almost 28% for full year 2025, as the company continues to expand its operation. So we believe that the company can hit our target price. So our target price for the stock is around 28.7 pesos per share.
And how far away are we from the target price?
I think it's around, it's more than 20% currently.
All right, 20% upside. Sounds good. Thank you very much, Wendy. Always a pleasure speaking with you. Have a profitable week ahead.
Thanks, Mimi. Thanks, everyone.